So far he's giving the police nothing but a good look at his backside. I don't know if this is a cry for help, but it certainly got my attention. Oh dear, that's an image going to stay with me for a very long time.
Scorched onto my retina.
I do hope he's not heading for the royal box. That's going to leave a mark.
Back to the game. Furlong, Delic.
Oh, we have contact.
Looks like he has more souvenirs for the crowd.
I think he's got the shoes to thank.
A minute ago they were all charged.
With global markets putting in a swing to the green, will crypto be able to demonstrate a reversal confirmation? Or will Gary the Grinch Gessler deliver us all a big pile of coal? And with Evergrande facing nearly $83.5 million in dollar bond interest payments due on Thursday on a $2 billion offshore bond, and many more payments coming up shortly after in the coming weeks, what does this mean for crypto and the global markets as a whole? Also tonight, we'll take a look at the upcoming vote on the infrastructure bill by 435 people who probably just learned about crypto 3 weeks ago. So, with a lot of uncertainty in the markets, everyone's asking the same question. What does it all mean for crypto? With Scary Gary and the geriatric gang on the loose, we'll dive into the numbers and charts and find out what's in store for the altcoins like Ethereum and Cardano. Alright guys, thanks for joining me again. Make sure you hit those like and subscribe buttons. Slap that bell for these ever so time sensitive notifications. And with that said, let's pump on in. So guys, if you've been paying attention to the markets at all, I'm sure you've heard about Evergrande. And they are one of China's largest real estate companies, and they're approaching a situation where it was looking like for a moment that they might become insolvent and unable to repay their bond interest. However, if you notice today, there was a nice recovery in the markets, and that's largely due to the fact that Evergrande has actually told some of these lenders that they'll be able to make all payments in the, at least in the short term. So I think, what a lot of people were worried about is that Evergrande was going to become like, the Lehman Brothers in the United States and start essentially a global economic crisis. However, it appears like Evergrande, at least in the short term, like we said, they're going to be able to make payments on, these interest bills that are coming due for them. Now, if you read this here, it says that, a lot of the larger economic firms that, do data analysis globally for different companies, it seems like they're coming to the conclusion that even if Evergrande is unable to make payments on these, the loan payments that they owe, it's not going to have the same type of ramifications that something like Lehman Brothers had back in 2008. There's also still the question of whether, the People's Republic of China will step in and assist them financially. It seems like, at least at the end of the day, we're reading opinions from people, and no one ever knows with China, what they'll end up doing. But it seems like they are determined not to assist Evergrande financially. So, we'll have to see what happens here. And Evergrande actually isn't the only real estate company who's, facing an economic crisis like this. There's several very large companies in China. But with that said, indications are that at least in the short term, this will be taken care of. And even if it does come to fruition that, Evergrande is not able to pay and they go bankrupt, it doesn't seem like that will have, the massive global ramifications that initially people were scared about. And I think that's why you're seeing the markets recovering today. So guys, let's take a look at Scary Gary, Janet Yellen, and the crypto hating crew. basically what this is, they're coming after stable coins, guys. So, they're currently putting together a report about stable coins, the SEC, that is, under the auspices of Treasury Secretary Janet Yellen. So basically, what they're doing here is they're going to assemble a report that is going to label stablecoins as a method for evading taxes, for illicit money laundering, for terrorism. They're going to put stablecoins in the worst light that they can possibly put them. And basically, I'm not quite sure what we can do about this. I think DeFi is going to be under a lot of heat, guys, because, a lot of people don't know about crypto and they don't know about DeFi yet. So if you have political figures telling them this is what people are using cryptocurrency for, we see it all the time in politics, guys. You're able to prey on the uninformed. The uninformed are uninformed until you inform them. And basically, in this situation, the government is going to be, for all intents and purposes, in a position to inform the majority of people, news going or news watching individuals, that crypto, DeFi in particular, is used by terrorists, money launderers, drug dealers, people using the black market, and tax evaders. That's what you're going to see. We've already seen it materializing as such. So just look here, guys. Securities and Exchange Commission Chairman Gary Gensler likened stablecoins to poker chips. So he's saying that essentially cryptocurrency is a large casino and stablecoins are your chips to gamble. And that's how he's going to label this industry. I think Bitcoin is going to be okay, guys, because Bitcoin's almost in a situation of being too big to fail. And, I don't think they know they can't go after Bitcoin. It's just not viable. It's not economically viable. It would have enough people are invested in it that it would have actual ramifications in the economy. DeFi, on the other hand, and the altcoin industry at large, that's not the same thing. They understand the power of DeFi. They understand that if you can get 8% interest, 10% interest, 20% interest on stable coins, why in the hell would you ever go to a bank and get 0.1% interest? Why? They understand that, guys. And this is a threat to the global financial system. And I don't mean a threat in terms of, destabilizing economies and sending, economies into, mass depressions, mass recessions. I mean, it's a threat in terms of, it's a threat to the global banks, to the banks. And if it's a threat to the banks, guys, I assure you this, they have much, much, much greater political influence. Their lobby is significantly stronger than the crypto lobby is. The crypto lobby, it's a nascent industry, guys. It's too small, and they're going to attempt, I don't know if they'll be successful, but they're going to attempt to squash DeFi like a bug. I assure you that. You watch. It's the writing's on the wall. If they're explicitly saying they're coming after it. It's not even like a secret plan anymore. You look at the infrastructure bill that they'll be voting on in 4 days now. Janet Yellen was able at the last second to get senators to add in an amendment to the bill that basically tells stake pool runners that they have to gather KYC information from anyone who stakes in their pool. Imagine gathering KYC from an anonymous individual who's staking in your pool. So this is coming, guys, I assure you. And you can see their game plan already. The regulator said there are examples of experimentation with private forms of money in the US, notably the wildcat banking era between the 1830s to the 1860s, when banks issued their own notes and competed with each other. Private monies usually don't last that long, so I don't think there's a long-term viability for 5,000 or 6,000 private forms of money. History tells us otherwise. So in the meantime, I think it's worthwhile to have an investor protection regime placed around this. So, some of the things he's saying, I think, are valid and legitimate. A large proportion of crypto, whether you guys like it or not, a large proportion is worthless junk. It has no use case. It has nothing other than to make whoever made it money. With that said, Ethereum, Cardano, Solana, and I don't mean to say, guys, that every project is junk out there. There are a ton of good projects that are implementing real change that serves a purpose in the world. I'm talking about these junk coins that you can get on the Binance Smart Chain, for instance. And that's not to say Binance Smart Chain is bad. I'm just giving an example. These coins that basically are pump and dumps. There's so many pump and dump schemes out there, guys. And I think if you're investing in stuff like that, you should be careful because A, you should be careful in the first place, but B, SEC's coming after it. And so we'll see what the end result is. But I think if you're in some of these lower quality coins, or you're in I'm not even quite sure what's going to happen to stable coins, even the large ones like Tether and Binance, US dollar, USDC. I think they're going to try and come after them, or at minimum make them fall under the same regulations that a bank falls under, where they will have to be backed by a certain quantity of US dollars. So we'll see what happens. And, I think it's going to be a bumpy ride, at least for a while, with regards to DeFi specifically. All right, guys, so let's take a look at Bitcoin to start with here. So as we've maintained from the beginning, Bitcoin in a bull market, in order to confirm a bull market, needs to come down to the 20-week moving average, bounce off of it, and go up from there. That's what we've been saying, guys. We've been saying that from the beginning, that's how Bitcoin confirms a bull market. So what did we get? This week, 2 days ago, we came down, we tested the 20-week moving average, and we were able to bounce back off of it. Now, one of two things is going to happen from here, guys. So I'm going to show you this. So if we go back to here, we're at the 2017 bull market into the downtrend. So we started to come down, right? And you can see we're making this downward descending triangle here. So when we first came down to test the 20-week, we just burst right through. And this is sort of like what happened in May. We came down, although it happened much faster during this market cycle. We came down, we blew through the 20-week. So, and this is what we're saying, guys. We came down, blew through the 20-week, then we came back up and we're not able to hold it. Very, very distinct from what we just saw. So what we just saw, we came up we've tested the 20-week 2 or 3 separate times now. We got above, we tested it. We went up another day, came down for a few days, tested it. Then we spent, another week and a half above it. Now we've come down to test it again. So you can see here is an example of, going above the 20-week, coming down and testing it. See, this is an example of what we're talking about, guys, right here. Staying above and then being able to bounce back and show strength and stay above that 20-week moving average. So if we go back, we can see, it's historically over and over again, guys. Look, it just rides the 20-week when you're in a bull market. So this is actually a great sign that we just saw. It's an amazing sign. You can see another example of when something like this happened was in 2013 when we had our double peak cycle. We fell below the 20-week, spent a bit of time below it. Then we came up and we tested it into the bull run. Same thing here. We've come down, broke below, then came up, and these are what we need in order to confirm the bull market, guys. So people that are, panicking right now, I think you should just buckle up and get ready for the ride, guys, because if we're able to hold the 20-week, if we're able to continue holding it, then this is a great sign. So this is exactly what we've been saying we want to see. And, as we mentioned in a few prior videos, we have this massive area right here. You can see here, we have this massive area of support right here, which, I personally don't believe that we're going to go below this again, this range here. It's not to say it can't happen, like some of the events we talked about today. If things get out of control with the global financial markets, then we could very easily, get into some trouble. But I tend to think that you have a significant degree of support in this area. And if we're able to hold the 20-week, like we say, we could be off to the races. Now, if we go below, then, I contend that this was not the market cycle peak. And I believe, as I've been saying in every video that we've talked about Bitcoin, I think the market cycle peak is going to come sometime in late 2022 or, sometime between mid 2022 to early 2023. I don't believe that, I'm not a subscriber to the 4-year cycle, the stock to flow model. I think there's so many holes you can punch in that model if you start looking at the data behind it. And maybe we'll, go into some of that sometime soon. But right now we're adhering to the playbook for a bull market. Like I've said, guys, just look at all the examples where when you are unable to hold this, you stay in a downtrend. But when you're able to go above and hold above, look at what you do, guys. Look right here. Look at the end of this is at the end of this, bear market that we were in. We got above and we held, and look at this. Okay. And again, here, we got above, then we weren't, we did go on a nice run here, but we weren't able to hold it. And so we needed some more time. And I tend to think that's where we're at now. We're either going to hold it and, test it a few more times, test it for a few more months, or we'll fall below. And then we'll just need, I think if we do go below, we'll probably need something like 6 more months, 3 months, 3 to 6 months, something like that. But I think in order for us to get to these $100,000 valuations you always hear people talking about, this is what we need. We need more of a shakeout. We need more time for the markets to, accept these new price levels. We're at unprecedented price levels, for the vast majority of the history of Bitcoin. So, the markets need time, for people need to take profits. And then, this will give financial institutions, this will give, large corporations the ability to invest in Bitcoin, but they're not going to do it at all-time highs, guys. You know, corporations don't FOMO. They're not going to buy something when it's at its all-time high. They're going to need this trend of consolidation to happen at least for probably a few more months. I would say if we really want to go to these high levels, we're going to need to see, probably 3 to 6 to 9 months of consolidation. Now, where that consolidation level is up for debate. I tend to think that it's going to be somewhere in this range. Somewhere in this range, guys. I do think we could challenge for new all-time highs sometime soon. But you have to think about it. How are we going to get to these new levels? And it's institutional money. When you're talking about, the types of valuations that Bitcoin has now, it's not going to be retail that's getting it up to these levels. It's institutions. So you have to think how they think. And I guarantee you, institutions weren't buying Bitcoin at, zero institutions bought Bitcoin at $64,000. Let's put it that way. So you have to think like they think. It's not to say they will never buy at 64,000, because they will, but they weren't buying this time at 60,000. So, we come down, we test this, we move sideways for some time, and then that will get us to the place where we're able to springboard off and then go on another run. All right, guys, that's it for tonight. As usual, I appreciate you guys. Thank you for joining me. Hit that like and subscribe button if you guys like this content. Slap that notification bell for these ever so time sensitive notifications. And until next time, see ya.